Welcome back to our series where we're talking about businesses growing from startup all the way to $250 million and how to use finance and accounting to grow your business. I'm Thomas McMillan, your host today, and I'd love to introduce Eric Rourke, who's the CEO of Rourke. How are you doing today, Eric?
Doing fantastic, Thomas. Great to be here. And congratulations on all you 7 to 8 figure business owners out there.
Today, we're going to talk about growing businesses from $1 million to $20 million. Eric, the first question I have is, we started off the last round with vision and purpose. Do you have any updated thoughts on that for this audience?
Thomas, I hope everyone took the advice from the last segment, but some people may not have heard this segment, may already be over $1 million in revenue. For all of you guys or gals and business folks out there who haven't had a chance to put in the vision and purpose, when you hit to $1 million in revenue, it is absolutely critical. Now is the time. If you haven't done that, make sure you go back and do that. It's a good time to bring your team into it. And it really does build the team behind what you're trying to do. But clearly communicating that will take your business to new heights. And I got to say, it's critical in building the right team. And at this level, once you hit the $1 million and moving up, it becomes more about building the team as opposed to doing it yourself and being that solopreneur that you did to get here today.
Great points. This whole series about how to use accounting and finance to actually help you grow that business. What changes in this stage with your accounting?
The funny part is, Thomas, and you're going to hear me probably say this over and over again, everything changes, right? And that's the point of each one of these stages is you really start going to the next level. But the one thing that I advise every business owner, especially as you're growing, each month, you need to review your financial statements. Whether you're doing it, you have the spouse doing it, at this stage, you're going to start turning over to maybe some more professional help. Every month, on the month, review the financial statements, what's going on. And some business owners are like, hey, I'm really good at the operations. I don't understand what this means. You'll learn. Just have them do it. It's an excellent practice and it sets a great tone. But whenever you look at accounting, your accounting needs are going to change. And there's different parts that we're going to look at, I think, today on what are some of those changes. First of all, you're going to need to build a documented process. And that's going to happen in all areas of your business. Accounting and finance is definitely going to be one of those. They call it a closed process in finance, but there's an AP process and so on and so forth, just depending on if you're paying money out, paying employees, and collecting money from customers. And this is one of those stages where a lot of the owners, they may have done it themselves. And at this point, you're just going to be too busy. So if you do that and you want to continue to do that, even if you're great, look, I'm great at accounting and finance and done it all my career. But when I got to this stage of my business, as stubbornly as I wanted to hold on to it, I realized it was time to let it go so that I could be working on the more valuable things in my business that only I could do as opposed to things that I could delegate. So if you are a business owner, you're doing it, congratulations, great job. But it is getting kind of the point where you need to let it go more than likely. The other thing that's going to be really important on the accounting side, Thomas, is I call it cost centers and commission statements, right? Mm-hmm. So you're going to want to look at, hey, how are these cost centers doing? You may be moving to multi-state, multi-location. You may even be doing international business. You're going to have different functions in your business, the sales, the operations, the marketing, and all those different departments and those department leaders are going to need key metrics in order to be able to, analyze it. And speaking of multi-state and multi-location international, your taxes and business licenses and everything that you're doing are going to become infinitely more complicated, especially as you're growing out to more locations. So I think it's just going to be very important to be able to manage that. And speaking of relationships, your financial relationship with your lenders, insurance, investors, it's going to be a lot more discipline, a lot more precise, and a lot more timing. All that's going to need to happen as you continue to grow through this stage.
That's great. It's a lot more stuff that a business owner is going to have to, deal with accounting. It's a lot more complicated at this point, clearly.
And I'm just scratching the surface. These are just some of the things that you're going to be dealing with. And there's some things industry-wise, and we'll talk about some more of this stuff here shortly.
One of the things that as you start growing, you start wondering, are my systems going to change? Am I going to need to buy more technologies? Can you talk a little bit about systems. You might have some ERP people start calling you. What is all that? And
Well,
what
Thomas,
business owners need to think about at this point?
yeah, and we even said it before we hopped on here, is people, process, and system, right? You're really going to want to think of that. And where you may have had a QuickBooks Online that works well, or a Xero, or there's different packages out there, those really become accounting packages, and they're meant just for doing the accounting back office type of work. What happens is you're growing the operations, you're having more people in more locations that need information, and there's a huge amount of efficiency of having them work in one system. So you have one source of truth, right? And so that's the difference between an accounting system, which is just doing accounting, versus an ERP system, which is bringing and communicating all areas of the business into the system to be able to drive the results. At the same time, it feeds back into accounting. It also gives information, allows people to process and become more efficient in their jobs. So the question becomes, when is the time to upgrade? And that's a very good question. And it's a very specific question. And the answer, Thomas, I just got to say is it just depends. It depends on your industry, your business, your phase, how quickly you're growing. So there's a lot of depends in there.
Let's talk about business growth, right? So how can accounting, and at some point you're going to have finance partners too. How can finance and accounting partner with a business to help them grow and become more profitable at this stage?
Absolutely. And a lot of people don't necessarily differentiate accounting from finance. And at this level, it's got to be the same person typically, because you can't grow those departments out. Bigger companies have the advantage of being able to have both and both competencies. But just a real quick kind of overview of accounting and finance. So accounting's focused on the past, reporting what had happened at given increments. Finance, for people within internal, is really focused on analysis and the future. What do you do with that information? So one's reporting, one is what you do with that information. And one of my big beliefs and what I've been successful doing throughout my career is if you do it properly, accounting and finance becomes a profit center for the business.
Interesting. How is that?
So one of the ways that you can do it, and there's several different ways. I'm just going to go over a handful of different examples today, but we could spend a day on this stuff and I love it too. So don't get me geeked out on it. So KPIs are critical. And so if you look at like Traction, Zelle, Scaling Up, all these different entrepreneurial programs that are out there, they all talk about dashboards and big threes and things like that. But the thing that's going to be important is you got to give that information to your internal management team, right? So there's three types of reporting. There's reporting to taxes, there's reporting to external parties, investors, lenders, and then there's reporting internally. And so many people get caught up in the other two. They forget about the most important one, honestly, because that's what drives your business growth. Mm-hmm. The KPIs are key performance indicators, and it gives the managers and the employees of the business a gauge on where they're at. So Thomas, if you were flying a plane, how would you feel about flying a plane without having any gauges?
I'd be pretty scared.
Yeah, you don't know your altitude, you don't know your GPS, you don't know anything, right? Without having good numbers and KPIs, that's what it is. This is, you don't have the speedometer on your car. So what's going to happen? You're going to go too quick and get a speeding ticket. But that's what KPIs are, and they really are that accelerator to keep a good pulse on the business. The other thing that you're really going to want to look at is budgets and forecasts. So you're going to want to come in and look and say, okay, I'm going to set a budget and what I think I'm going to do for the year. And that's what companies used to do, and they used to have the budgets and the budget to actuals. But really, it's about forecasting now. Okay, now that we've got a quarter in, business is so dynamic nowadays. It's not, hey, I know what I'm going to do a year from now. I don't know about you, Thomas. Sometimes I feel like just a quarter from now. And that's the best practice is taking that budget, re-putting it into a forecast the next quarter, see where the business is going and where you're heading. But those are important things because you can see overall where your profitability is going and what you need to do. The other thing is drilling into and doing scenario analysis and modeling. So let's say you want to open up a new location. You just open up the new location? I wouldn't. I'd want to try to understand what's going to look like, the profitability, the costs, when I'm going to get this famous term of ROI, return on investment. And you're going to want to dig down into things like, is this customer buying more from me this year, less from me? So there's quite a bit there. But more importantly, finance is going to report externally to your lenders, your investors. You're going to be able to look at the profitability. You're going to have to use that to look at covenant calculations, especially if you're borrowing significant amounts of money, to be able to manage your working capital. Like again, we talked in our last series about blood being or cash being the lifeblood of a business. Working capital is that lifeblood. Where do you put it? Where do you invest it? Are you getting the best investments? Are you maximizing it? These are all things that above accounting, which is reporting the past, that you can partner with to really help. Just it's a catalyst for growth in your business and profitability.
So as you're growing out in this stage, are there any specific industry considerations that people need to make? I'm sure like each business is different, but could you give us some highlights of some of the major ones?
Yeah, all businesses are different and the key drivers that affect profitability. But when we talk about doing this finance and financial analysis and reporting and KPIs, it varies by industry. And I'll just give you a few examples of things that people are going to want to look at. And we'll just take a manufacturing environment. So if you look at manufacturers, this significant amount of their P&L, right, profit and loss, is in their cost of goods sold. And the critical success factor is how efficiently can you get things from raw materials to finished goods to out the door, right? And that's where cost accounting comes in, understanding cost, volume, profit, and overhead absorption, and all these variances, purchase price, material usage, labor efficiency. But getting this dialed in and keyed in, Thomas, really goes back also into pricing. I've watched companies go in and they price their products where they were losing money. And if you get this down, it really is a key advantage. When you get into the distribution, transportation segments, this is a penny business, right? And so efficiency is key. So any little inefficient thing has a ripple effect because it's over so many transactions. And even more with the transportation is there's commodities involved, and there's just so many considerations that you want to get a keen eye on. E-commerce, you're going into multi-states, there's tax filings, and there's new cases that have made that even more difficult than in the past. And shipping costs are going to be just huge. Retail hospitality, you're working so hard to make this money. You don't want it going out the cash drawer or out the back end with the inventory. Mm-hmm. And I hate to say this, but in the world of today, it's not whether you're losing money in shrinkage or not. You are. I hate to burst your bubble, but you are. But the question is, do you know how much? And if you don't know how much, then first of all, it's going to be more than you want. But if you don't know how much, it's going to be a lot more than you want. Construction, build, just like manufacturing, bid to build, there's a lot of profitability that gets lost there without good insights. And then software has a tremendous amount of accounting complications that you're going to have to look at and report to, especially because a lot of these companies like software and life sciences have venture-backed companies and external investors to make it happen. So there's just so many considerations as you're going out, and these things are really important to dial in. Because what happens, Thomas, if you don't, you end up losing the profitability along the way. Which one hurts you from a P&L perspective, but even more that profitability that you can put back into your business helps fuel and accelerate your growth.
So what are some things that businesses in this stage need to do just to minimize taxes?
Yeah, first of all, you need to get a good CPA, right? So it's one thing, a lot of business owners in the startup phase will get a CPA that they know, it's a cousin, it's a friend. Maybe there's no yellow pages if you Google it now. But at this point, there starts becoming more money on the table. The compliance is more sophisticated. There are abilities to come up with more better tax strategies, again, depending on the industry. There's things that are tax credits out there, which is money that you get back. If you're not aware, you don't take advantage. We see that all the time, R&D tax credits and WOTC tax credits and enterprise zones, those type of things. And then if you can, and you can do this legally, right? If you plan properly, then more money stays in your pockets, right? Because there's timing differences that you can use to fuel the growth than in the IRS pocket. And there's definitely, you do that very ethically, but you want to make sure that you maintain as much cash as possible so you can help fuel your growth. Mm-hmm. And a good CPA does all that for you.
That's great. Back into one of the things we talked about in the startup to million was outsourcing the back office. Can you talk about like changes that really happen in particular around accounting and finance with the back office in this stage?
Yeah, and Thomas, I would suggest you start outsourcing as much as you can, especially in this growth stage. You can, when you're 0 to 1 million, you can bump around, but when you start getting to this stage, it starts getting too big, and it starts getting too big really quickly. And that's marketing, that's accounting, that's IT, that's HR. Those type of functions are really great and work well. But let's talk a little bit more about the accounting and finance lens, since that's our area of expertise. And like I mentioned before, it's just getting too big. You can't do it as the business owner. There's all these additional complexities, and we just went over some. We just skimmed the surface. And the need for sophistication comes up when now it's not just doing the books and bookkeeping, it's really coming up with the finance and the financial analysis. And we talked about the specialization of the accounting, the taxes, and all these things that come into play. But one of the biggest things that I see is I call it the staffing dilemma, right? So you're in this dilemma where it's okay, I need these finance functions and I need more accounting functions, and it's going to help my profitability. And typically companies may want to hire a bookkeeper, but they really need like a controller, but that's pretty expensive because they only use a small portion of the controller skills. And by outsourcing, you get the expertise that you need at the level you need it. And look, if you're $1 million a year company, you don't need a full-time person. There's no ifs, ands, or buts about it. And especially in this stage, you need diversified skill sets. And where this really comes out is when you're looking at your overhead costs, because you want to, again, still watching cash. Cash is key. But if you have this big overhead cost as a percentage of revenue, it just pulls down your ability to grow because it takes out your investment capital. So it's a very efficient way to be able to do it. What's funny is when I talk about this, we think about, obviously it's going to be less cost than building out a department. You get better resources and expertise. What came to my attention that I didn't realize that whenever we first started doing this?
What was it?
Turnover. So if you've got one or two people in that department, business owners call all the time, oh my God, my controller just left. I don't know what to do. And they know everything. And I don't know all this stuff. And this is one of the best reasons for outsourcing, because that's not your problem. At that point, it doesn't become your problem. That's the outsourcing person's problem. And then they can help with the continuity and things like that. But it's one of the biggest fears of the business owners. And it's not, in today's day and age, I used to be with the company for a long time with my father's and grandfather's time period. Today, it's very different. We have people that want to diversity and change and like the spice of life. So to think that you're going to have one person that's going to be in there for 10, 20 years, it's probably not going to happen. A lot of times it's really 3 to 5 in today's day and age, realistically.
So any final parting thoughts on this stage of growth from 1 million to 20 million?
This is an exciting time. Entrepreneurs out there, you're going to have the time of your life, but it's going to be a very stressful time because there's going to be a lot of moving parts. And I think just really the key is start building the team around you, the experts around you. That will help you get to these higher levels. And even when I say experts, bring in the leadership team and the employees. You're going to want to build people around you that are going to be able to take your business to new eras and new ways. And the sooner you're able to do that and grow that team, whether it's your internal employees or bringing on partners outside, the more fun it's going to be, the more quicker it's going to advance, and you're just going to have the time of your life.
Thank you so much, Eric, for your expertise on this. And this concludes our session on growing from $1 million to $20 million and how to use finance and accounting to grow your business as part of our series of growing from a startup to $250 million.
God bless you all, and we look forward to seeing you and your businesses grow.